Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, great day to have an interview. The U.S. Fed has dropped interest rates by 0.5% in an emergency move to help stave off the economic impact of the coronavirus. What are your thoughts considering your previous interviews about the federal administration in the United States and Jerome Powell, the head of the Fed?
What I would say is you've got a realtor in the White House, as I've said before, and that realtor is unlike 99.99% of the realtors out there. You can hate the man all you want. The fact of the matter is he knows something that economists and politicians and bankers don't know. Trump understands that unless he gets Powell to bend to his will and drop interest rates, regardless of this coronavirus excuse or not, his odds of being reelected were very low. Trump is fully aware of the relationship between interest rates and an economy. He's on the record for this. In the 1980s, I believe you can still find his old testimony before the New York Fed about how interest rates impact not only his home sales, but also the economy itself. If people don't want to read these things, that's their problem. Anyone who did not fully expect, and then financially embrace the fact that the President of the United States, in an unprecedented action, meaning previous presidents never outright challenged the Fed in this manner, has been asking for lower and lower U.S. interest rate in a U.S. economy that supposedly has been increasing and increasing and increasing. In other words, Trump has been asking the Fed to act totally the reverse to what it normally would act. If your economy looks like it's going relatively good, the Fed will hold rates or raise rates. That has gone on for 50 years. Trump knows otherwise. Trump understands that it's not stable interest rates that matter, because rising interest rates in no way supporting the economy, but even stable rates do not support the economy. The housing market relies upon falling interest rates, because what you have in a housing market, which we've talked here in the show about before, is the cyclicality of the housing market. The trading cycle is what we call it. There is only a certain amount of activity that can happen in a housing market before it rolls over. Historically, there's usually your trough to trough about 3 years. This has never changed. This has always been the same. It's covered up because of the way the stats are presented by organized real estate. Now, you have to remember, Trump's been a broker for 50 years. He knows how organized real estate runs. He knows why the New York City does not have a public MLS system. Now, let your listeners who are complaining about real estate data in Vancouver or Ontario, or in BC or Ontario, understand that in New York City, there is not a New York MLS. The real estate brokers in New York, the largest city in North America, the highest number of real estate brokers in North America, the most valuable real estate in North America, have kept the National Association of Realtors out of New York since its inception. They don't call themselves realtors. Why? Because they want total control of the message, which Trump fully understands. I can only imagine, Jim, the pressure that Powell has been under that isn't talked about in the newspaper, it has to be so unnerving for him. His ability simply to stay in his job, because Trump knows the term limit normally that applies to the Canadian version of the Governor General, the President of the Fed. He doesn't have to follow that. He can fire Powell whenever he wants. Everybody else can complain about him firing. The fact of the matter is, he has the legal right to do it. And he knows it. He's a realtor who knows the rules and regulations and uses them to his advantage. So what you see here, what you see happen today, you saw Powell and Munchin, I believe, went to the G7 and had a meeting yesterday. And now we see today rates drop in the States by 0.5 point. Anyone who did not expect this to happening simply didn't follow or research Trump's opinion on interest rates. Because you can be sure that the pressure that Powell has been under since as far back as November, well, actually, it was right after Trump came into power, the pressure he would have been under to continue to drop interest rates and their refusal to do so, or once Powell changed hands, became in charge. A Trump appointee has been under an unbelievable amount of pressure to drop rates. He was given his chance. The coronavirus has given Powell his chance to escape the pressure that he's been under without people calling him out in the paper today. They are now saying that Powell has made this change because of coronavirus. No, folks. It didn't happen for that reason. It happened because Donald Trump, realtor in the White House, has been pressuring the Fed to lower their rates so he can get reelected. Nothing more, nothing less. This is simply an excuse that Powell now has at his disposal to lower those rates without looking like Trump's pet dog. That's exactly what has gone on. Now, what Canadians better worry is what Poloz is going to do. Because what Canadians haven't been told, which you're not going to read in the news headlines, is that already in the last year, mortgage rates have fallen in Canada the same amount they fell in the 3 years after Poloz took over his post. Let your listeners understand, all of the house price gains from October of 2013, which is just a few months after Poloz took his position, through the fall of 2016, this is the average between Vancouver's peak in 2016 spring, Toronto's peak in the spring of 2017. All of those gains, supposed gains, house price illusion, the interest rates in the last year in Canada have fallen the exact same amount. The way that we measure interest rates, the way that we measure mortgage rates, they have fallen the exact same amount in 1 year. What has happened as a consequence? All of a sudden, Canadian home buyers are purchasing homes that are more expensive. Your local real estate boards are once again claiming the magic of house price illusion is taking place and house prices are going to rise, have been rising. You saw the fake news, the fake causation news being issued in Vancouver just today by the Real Estate Board of Greater Vancouver, who didn't come out and say that the average condo buyer in Vancouver is now spending $85,000 less than the average condo buyer was at when the peak of the market was hit. You didn't hear one thing in the news, one report that condo buyers are spending $85,000 less on average today in the month of February than they were at the market's peak. You don't hear that. You're not hearing that the average single detached buyer is spending $225,000 less in February than they were at the market peak. Your listeners simply have to understand that when you get a $200,000 drop in average price being paid for the detached home in the city of Vancouver, the amount of home that you're actually acquiring is probably worth almost $1 million more. You don't see those stats issued by the Real Estate Board of Greater Vancouver. What we saw today in the USA, we watched it happen live. And our staff here, they have been able to watch when I have said what the realtor in the White House is going to do. I'm not saying this because I'm have prescient knowledge of this. Well, I say this because I know exactly how real estate brokers work, how they think, what they believe, what they know. And your realtor in the White House simply needs to get reelected, and he is putting the pressure on the Federal Reserve to drop their interest rate. Laws in Canada is clueless. The man who leads the Bank of Canada is clueless. Has he once in any speech, any of the people that he has under him, Carolyn Wilkins, has she once mentioned that in the last year, the interest rate has fallen identically in Canada, the mortgage interest rate, to what it did in the 3 years from the fall of 2013 forward? No, you can't find that printed anywhere. You can't find that printed from CMHC. You can't even have here Evan Siddell from CMHC telling this point. Why? These are not fake numbers. These are the actual data-driven numbers. Laws tomorrow is about to unleash an interest rate drop in Canada. He is going to unleash it 1 month before Bill Morneau unleashes a further interest rate reduction effective. Because when we talk interest rate, we talk about qualifying income. Between tomorrow's announcement by Laws and the enactment of Morneau's previously decided upon policy change on April the 6th, as of Friday of this week, the average home buyer in Canada will be able to spend more money. The governments have already constrained the amount of money that they're able to spend well below historical thresholds Canadian families have followed for 40 years. So what do you really think is going to happen on Friday, commencing this Friday, when home buyers are told you can start to spend the same amount of your income as your parents did? What do you think they're going to do? They're going to go out and buy more expensive homes. When they buy more expensive homes, organized real estate across Canada will report this as rising house prices. The entire Canadian population will believe this talking point in the same way that they believed it for 40 years. Think about it, folks. If there are 3 houses, 100,000, 120,000, 150,000, normally your parents could buy the $150,000 house. But the government says, no, you can only buy the $100,000 house. Then the government changed the rules and says, okay, you can buy the $120,000 house. Do you really think you're not going to spend the $120,000 when your parents lived a life, paid off a mortgage, have the wealth that they have today on the $150,000 calculation? Of course you're going to do that. That means not that the house has gone up in price. It simply means you are buying a more expensive house. Look, if you're in Vancouver today and if you're going to be in Toronto on Thursday, if you're buying a house in Vancouver today, you're going to be told the housing market the sales have increased by 40%, prices have stabilized, and we expect house price gains to be taking place. I haven't even looked at the REBGV report today. I haven't even looked at it because I know what it's going to say. If I'm wrong, your listeners can make their comments on YouTube. If it doesn't say that they reported sales over 40% gain and the prices have stabilized, you can call me out because I know that's what they're going to say. They're not going to say that only 17% of home sellers trying to sell their home in Vancouver in February actually sold their house. That's right, folks. 83% of the homes for sale in the month of February did not sell. The housing market did not get busier. All you had was a continuation of sales that were recorded in October and November and December for first-time buyers moving up the sales chain. That increase in sales simply increases month over month. When you compare this year's numbers against last year's numbers for the month of February, because last year's numbers were on the downswing. This year's numbers are just on the upswing. In other words, opposite sides of the trough. Of course, you're going to get ridiculously sounding increases, like a 40% increase in sales. What I'll tell your listeners is this: it's all nonsense. It's all a narrative that is sent out to the public to create an anchor point of thought. Now, every real estate stat that is released to create an anchor point. Now, they have terms in psychology and philosophy about anchoring. But from organized real estate standpoint, as a realtor, when I was selling points, you always used an anchor point. You use an anchor point on the MLS for every single listing you're looking at. Your listeners should, if there was a website that produced real estate listings without a price, that would be the real estate website I would tell people to go to. And after you have evaluated the home, only then could you click the button where the real asking price shows up. Because only by looking at a house without hearing a single comment about what it is asked for sale for, or what similar homes like it are for sale for, are you allowed the freedom, with the way the human mind works, of determining what you think that home is actually worth. The moment you see a listing price, you are going to be anchored to that price. The home you're looking at, you are automatically going to think is worth more money than it really is. Organized real estate as a seller beneficial system is built on this premise. In the 1980s, everybody knew this. I can't explain why nobody knows it today. What I do know is this, Jim. The realtor in the White House knows more about how an economy will move over a 2 to 7 year window than any economist in the nation. You can think the guy is an idiot as you think he is. And he may be one. But what I can tell you is this. He knows something very few people in the world know. And I know this because we know the exact same thing. I know this because he has built his entire business on this model. I know this because this is how real estate has been sold for decades. You should not have expected anything less than what you saw today from the U.S. Fed. The Fed acted on the pressure of the President of the United States, who threatened to fire Powell if he didn't act. The coronavirus, which we already know has almost no impact in America today, certainly no impact in Canada today, and yes, we do know it has an impact on goods being brought in from China. But right now in the American economy, it has no impact. But they dropped rate 0.5 point. Why? Realtor in the White House.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener asked, I signed up to get MLS listings sent to me from a real estate website. I immediately started to get calls asking me to get pre-approved for a mortgage at a major Canadian bank. Is this a scam?
Is it a scam? Yes, it's a scam. It's 100% scam. It's a scam that's gone on for over 12 years. And the problem that I have is that the Competition Bureau and the Financial Consumer Agency of Canada and the Advertising Standards and the OSFI haven't acted upon these things. What happened is that there were rule changes that are made by regulators that opened the possibility for this to happen. So these rule changes the regulators made innocently because they believed their board of directors, who happened to be all realtors. Excuse me. So your Real Estate Council of British Columbia, your Real Estate Council of Alberta, your Real Estate Council of Ontario, all have boards of directors that are all realtors. These realtors have used the ignorance of the Canadian population on MLS systems, on MLS stats, to control the narrative. They control the narrative at these real estate associations. As a result, tremendous opportunities for non-real estate brokers have opened up by them spending $5,000 to get a real estate brokerage license. And I suspect this is in case in point. What I can say is I will use this example. OJO Homes, is up until January, in early January, was supposedly a website where they would refer you to a listings website where they would refer you to an independent realtor and an independent mortgage broker, and they would help you by giving you MLS listings. They claim to use artificial intelligence to allow you to get listings sent to you that were more relevant to your home buying experience. Well, what they didn't tell anybody is this. The Royal Bank of Canada has a ventures fund, which invested in OJO Homes. OJO Homes refers everybody who signs up with them to the Royal Bank of Canada. Listen to that, folks. That wasn't disclosed. That does not appear on their website, but this is what is going on. At the same time, in early January, OJO Homes was working with Royal LePage. In other words, the realtors they always referred you to were their Royal LePage partners. Now, why would OJO Homes do that? After all, they have this magic AI intelligence. You know, people who have never sold homes to home buyers in their lifetime have created a magic AI algorithm. Why would they do this? Well, it's called referral fees. Up until 12 years ago, that was impossible. But because of the changes that have taken place, now Royal Bank of Canada is able to pay referral fees to OJO Homes, which is owned by Royal Bank of Canada, and circumvent provincial trading legislation. OJO, everybody wonders, how did Royal Bank of Canada get a boost in their mortgage book in the last quarter of last year? I wonder if OJO Homes had anything to do with it. Now, OJO Homes, clearly Royal Bank has set this up. The same way that Rogers, you know, the cell phone company that used to own Zoocasa, thought that they were going to pull one over the Canadian public until we exposed them. OJO Homes clearly had something else in mind because in mid-January, magically, they ended their partnership with Royal LePage and they opened their own brokerage. If you call them today, they will tell you that they will get one of their partner agents, their OJO Homes agents, to work with you. Guess what, folks? When you go to reco.on.ca, the regulator of real estate in the province of Ontario today, and you do a registrant search for OJO Homes, all one word. They were clever even with that decision. You've got to you've got to do the search on OJO Homes as a single word, no space. Oh, magically their brokerage comes up now. Guess how many employees they have? One employee, the broker of record, a broker who you can go on LinkedIn and find he's been in the business 4 years based on his LinkedIn profile. I mean, I don't know how long the guy's been registered. What I can tell you is this. It's a scam for the simple purpose of being able to refer innocent Canadians to the Royal Bank of Canada's mortgage division. That's what it is. And any of them that are foolish enough to say that they would work with an OJO Homes agent will get referred to a partner agent who will pay a referral fee back to Ojo Homes, which in turn is owned by Royal Bank, which gets who as an investor in Ojo Homes, who obviously will get a share of the profits that Ojo Homes creates. Nowhere on their website is any of this disclosed. Nowhere. So this listener who's posing this question, this is the type of situation the Canadian public has to deal with. When Rogers owned Zoocasa, they tried the exact same thing until I caught their broker of record violating the Real Estate and Business Brokers Act in Ontario. I sent him an email and told him that if he didn't close down Zoocasa, I was going to file a complaint with the Real Estate Council of Ontario. He knew who I was. He knew of my history in the business. And I said that I will issue a complaint because what you're doing is a violation of the Real Estate and Business Brokers Act. And you were the broker of record. You were 100% solely responsible. Now, they weren't making any money with this Zoocasa, so he really had nothing to risk. He could quit as broker of record there, and he could go be a broker of record at another real estate firm, which is what he did. Zoocasa, Rogers, all of a sudden, no longer had a broker of record. What did they do? Sold it off. They sold the brokerage off, and now Zoocasa is with some other one-listing brokerage, inexperienced sales rep who is a tech person. There's also an affiliation with RateHub. All of the people who access that website don't know all of this has gone on. They are making decisions using the information, the advice, the recommendations, the beliefs that these disguised tech brokerages are unleashing upon them without disclosing. It's highly likely that these brokerages are violating provincial trading legislation by accepting referral fees and paying them out. There is no question what the Royal Bank of Canada is doing with Ojo Homes is unethical at best, or at least, and illegal at worst. There is no reason that any Canadian needs to go anywhere but Realtor.ca for their listing information. Everything you are hearing about, we get listings earlier than Realtor.ca. We get more listings than your local MLS has. It's all a lie. What I mean when I say a lie is, if you challenge this with the provincial regulator, the real estate brokerage would face a penalty or lose their license. It's a lie. You cannot get advance notice of listings from any real estate website in Canada. The technology as of 2020 means if a property is listed in Toronto or Vancouver, it will be uploaded on Realtor.ca within a couple of hours. That house is not going to sell in a couple of hours because the listing brokerage would be sued for failure to do their due diligence trying to sell the property. It at least has to be for sale for a couple of days, not just hours. When you hear people telling you something that seems too good to be true, it really is too good to be true when it comes to real estate listing. Real estate listings on Realtor.ca are the most effective way to look at houses from the outside. I would prefer that the prices weren't on Realtor.ca because of that anchoring factor, but there's nothing that I can do to change that. We're talking with someone right now that we may decide to launch a non-price site, just what I'm talking about. The odds in that are low because we cannot be connected with a real estate broker. And to get access to the listings, you got to be a real estate broker, have a relationship with a real estate broker. So there's really no workaround towards that. That doesn't mean someone else might open up a site like that. But then again, what do you mean the site has no prices? What's that worth to us? It's only worth something to people who understand how to use it. So if they're telling you anything that seems untrue about listings, this guy's getting listings before every other agent in the city knows the houses are for sale. False. She knows exactly what the solds were on the street before every other realtor in town, or the ones that sold that no one else knows about, she knows about. False. Don't worry about it, folks. Go to Realtor.ca to see what's for sale. Find some local sold site if you want to know sold prices. But the sold prices, I will continue to stay on this as I have been since the start of the show. The reason why sold prices harm the Canadian public being published is because they create that anchor. When you have a system already built to support sellers getting the highest price possible, and then buyers looking at the sales price believe they can use those sales prices to determine the value of another home, you still are in the same problem. You still have the same bias. You still have the same anchor. What I would tell your listeners is only 17% of the homes listed for sale in Vancouver sold in January. That means, in February, that means 83% of the homes you saw on Realtor.ca or the realty site that the real estate boards in Vancouver have. 83% of those homes could be bought for less money today than they could in February. I don't care what anybody's telling you. These people who issued this question simply need to learn how to avoid these traps that are being laid out before them.
We'll have more with Ross Kay right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, I know it's early, but what are your first impressions of organized real estate's talking points about the February housing market?
Well, I guess I kind of touched about that on the last section there, Jim. The numbers are being produced exactly as we figured they were from the fall of 2019. So when we're forecasting in the fall of 2019, we know what the numbers are going to read the following spring. That is not forecasting to us. I'm saying that because housing markets function in a singular way. They don't change. We do have to change our forecasts with this historic drop in interest rate. In other words, it's a historic drop in the minimum qualifying income. Oh, everybody's asking, what's the minimum qualifying income? Well, that's right. They don't talk about it. They don't talk about the minimum qualifying income. But it's what drives every housing market. It's why CMHC's policies are unfair. It's why in the last week we talked about the second-class citizen. It's why you have to earn so much money in the city of Windsor to buy a $1 million home than you do if you're working in Vancouver or Toronto. It's what we're seeing in the numbers are true. Now, of all the numbers that you're going to read, all the things you're going to hear, what you're not going to hear is this. The best thing about the housing market today is Alberta. The Alberta economy, GDP, is going to get a boost for the first time in a very long time. I don't care about the false positives that economists have claimed about the BC or about the Alberta economy. I mean genuine positives. Because the housing market in Alberta is now into its second month of an upward swing, and it's an upward trend in the cycle. It's second month. Next month will mark its third month, and that month we are also going to see the impact of a lower minimum qualifying income for all the homes that are for sale today. That's going to fuel house price illusion, which will fuel the wealth effect, which will fuel household spending. That household spending will be recorded as a higher GDP for the province of Alberta. It is now March the 3rd. No one else is reporting this. Go out and check your newspapers today, and then come back and tell me if I'm right 4 months from now. Now, that's a long time, right? 4 months is a long time. We're talking coronavirus has happened in the last 3 weeks. Interest rates have dropped 0.5% in the United States, about to drop 0.5% tomorrow. Mortgage qualifying rate is about to drop on April the 6th. That's just in the next month. I mean, we've got a U.S. election. We've got changes at the Bank of Canada going to happen. We're going to have a new Governor General. All of these things these changes are nonstop. You have a new Real Estate Trading Act in the province of Ontario just coming into force. You have all these changes that are taking place. Okay, watch. These forecasts are still going to be accurate unless a worldwide recession hits. And then that's a different story. That is the escape that we have. If a worldwide recession hits, when it hits, it's going to hit. When it hits, that's going to have to change our forecast again. Because global housing markets all move in the exact same way. The fact that it took so long for Alberta to swing positive from the first negative gains recorded in 2013, that huge, over 6 years it's been, is simply good news for Albertans. Yet Albertan politicians won't know what the heck I'm talking about. Alberta homeowners won't know what I'm talking about. But they will innately act upon this change, as they have for the 40 years our data covers. It has never changed. So I guess there's a first time for everything, but when all of these markets, in all of these places, respond identically the way that we look at them, why should we expect anything different? So Alberta's numbers will be underreported. The positives of the Alberta housing market will be unreported. The negatives of the Vancouver market will be underreported. The positives, fake positives, will be overreported. Just the opposite in both instances. This week we're going to hear the Toronto Regional Real Estate Board probably claiming they've got a 40% increase in sales. They're not going to tell people why they recorded that. We also are expecting a higher than normal price increase in the month of February than we normally would. It's possible it's going to be 15%, around 15%. They're going to claim. It's not real. They're going to claim that to be the case. Then a month later, a few weeks later, everybody's going to believe that's true. They're going to actually believe whatever the Toronto Real Estate Board tells them. They're going to look at the MLS, they're going to look at Realtor.ca, and they're going to see proof of what they believe, because the illusion is that powerful. What is also this powerful is this. Unless mortgage minimum qualifying income drops sooner than later, a housing market turns over. The moment the minimum qualifying income stops dropping. The minute the minimum qualifying income stops dropping, the housing market rolls over. This has gone on for 40 years. The data shows this clearly, black and white. So what you're going to be reading in Toronto is only relevant for someone who doesn't look at all of the data holistically. When you're staring at one point, if you're staring at the bullseye of a dartboard and you don't see what's around the rest of the dartboard, you don't see the sheet of wood that the dartboard is screwed to, you don't see the wall that the sheet of wood is nailed to, you don't see the room that the drywall, that the sheet of wood, that the bulletin board that has a bullseye is, you don't see the whole market. You're only looking at the bullseye. If you're only looking at the bullseye, you believe the bullseye is the world. You believe that's real. You believe in flat world, the world is flat. You really believe that. And that is what happens with house prices. Organized real estate has an anchor point that has been entrenched in the minds of Canadians through 50 years of seller beneficial real estate stats. They believe it. Until someone comes out publicly and debunks it, they're going to believe it. You're going to have to debunk it in a certain way that Canadians will believe, because the infrastructure that sells homes is built upon it. CMHC lends money based upon it. The Bank of Canada Governor General dictates interest rate policies because of it. It is all-encompassing. The federal budgets that are created using it. Your income tax that you pay each year is calculated as a consequence of this false belief. Anybody who wants to go public with that and expose this fraud, I think you're probably putting your own life at risk. What I can tell you is there is a way to subtly direct people so that they don't believe this and that they can take the appropriate action to protect themselves and their family. And what that means is they believe enough that they won't rush out and buy a house when Vancouver Real Estate Board tells them sales are up 40%. Fear of missing out is taking place. Sellers are under unprecedented pressure. We're seeing bidding wars again. Are you kidding me? 83% of your homes didn't sell last month. What do you mean bidding wars? Are you actually not disclosing that some realtors are underpricing listings in order to create a bidding war, which in turn other realtors hold up to the public as a sign that the housing market is getting busier? I find that totally unethical. I find that totally irresponsible. I find that fraudulent. Why is the real estate regulator in British Columbia not acting upon it? Why is the regulator allowing real estate brokers to underlist properties to generate multiple offers so they can in turn claim bidding wars are taking place? This is going on in Toronto right now. We're looking at properties that are strategically underlisted to facilitate a bidding war, which in turn the mainstream media will jump upon and claim bidding wars have returned. They won't state the reason the house had multiple bids was because it was underpriced. You put a brand new Lexus in my front yard and you put a $10,000 price tag on it, I can be sure there'll be a lineup of people with a check with $20,000 ready to buy it. If you put $40,000 on that car, you're going to have someone come up and negotiate a lower price because they think $40,000 is too much, even though they're already anchored at that $40,000. So, what are we going to see across Canada this week? You're going to see exactly what I've just talked about. You're going to see positive market gains in Alberta not being reported. You're going to see the reality of the Vancouver real estate market being reported as an increasing market. You're going to see a shift in sales in the Toronto real estate market being supported, that the market's as crazy as it was back in 2017. House prices have returned to what they are in 2017. And what I'll tell your listeners is this. If you go to a single street in the GTA and you do a granular research on that singular street between 2017 and today, you will not find that prices have returned. No more than you would have missed that Vancouver condos are now, Vancouver condo buyers are spending $85,000 less buying a condo today. Now, I'm not saying that's affordable, folks, but what I'm saying is that the average condo, it's $666,000 being purchased. That means there were a lot of condos purchased that were under $500,000. That means that the mortgage that the average condo buyer in British Columbia is taking out is $85,000 less than the mortgage they would have taken out in the spring of 2016. They were taking out in the spring of 2016. Imagine the pressure on the bank CEOs in your province. Imagine the Brian Hughes of the world, whose incomes rely upon their banks making comments. Imagine your Tom Davidoffs, your Andy Yans, the guys who work at the post-secondary in your province, who jobs rely upon those institutions having foreign students. So the narrative that they have to fuel is nothing that would reduce pressure on prices, or stating that foreign students are a primary cause of house price gains or unaffordability in Vancouver. You're not going to see it. They all have an ulterior motive. It may be innocent. They may not even know that they have it, but it's going on. Your real estate stats are going to be released in that manner. You know, the Quebec market is finally cooling. Do you think we're going to hear that? We have four major provincial markets in this country: Quebec, Ontario, Alberta, and BC. And I will tell your listeners this. The Canadian economy runs on those four markets. I don't care what anybody says. The data is conclusive. The positives that is taking place in Alberta should be a benefit to their economy. The negative in Vancouver and BC is a negative to your economy. The negative in Ontario is a negative to their economy. How do I know this? Because land transfer tax collected by the government will be less in February in 2020 than it was in February of 2017 in Ontario. Less tax collected. What is the government going to do? Get a higher deficit? Didn't the federal government of Canada miss their deficit projections the last few years? I wonder how much the lack of understanding about the housing market, house price illusion, the wealth effect on the economy is to blame for that. seems to be pretty coincidental. Hey, maybe I'm wrong, Jim. Maybe I'm making all this up in my head.
Well, people can go back to your past interviews here on the show to find out, no, you haven't been making it up. You're just saying what you've always said. Ross, thank you so much for being on the show.
And thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. You can also find us on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.